A common question we get as technicians all the time is when something's hitting a new all-time high, like crypto is here, is how do you manage that trade? And it's actually a really hard question. So we're going to go through some possibilities, some ways to look at potential targets on something that's hitting a new all-time high, because you don't have just like a resistance area that you can target or something like that, and different ways that you could potentially trade this, because as we know, sometimes when Bitcoin breaks new all-time highs, we can really rock it. Sometimes we just fail and back down. So we want to have plans for kind of both of those. So let's grab into the chart here. I want to talk about this where we have Bitcoin hitting a new high right here. And this is obviously the most important chart, or the most interesting chart of the week, because it's such a big asset that's watched so much. And again, we're breaking these all-time highs. So one of the first and kind of the most common ways that real hardcore technicians will look to do this is with a Fibonacci extension. And what you're doing is you're looking for a pullback of a more recent move that you've had. And you're trying to extend that from the move up. Now, I'm not right? I try to demystify everything as a quant, right? What we do over at StatsEdge Trading is everything we do is data-driven, systematic, just something that we can put our finger on and say, if I do this over this length of time, this should be my expected result, give or take, as opposed to kind of the more voodoo sides of technical analysis. But why I like this is because essentially what you're doing with this 1.18 fib extension is you're saying, what if this particular pullback that happened here, what if we break that and we can't kind of double that move? What we can do is put up maybe 2/3 of that move. So that's what this is drawing out. It's saying from this high right here, this breakout that occurred, we'll get about 2/3 higher. And that puts us around 32,000. If we do it from this area right here, it's about 36,000. So roughly around 35,000 or so is a target based on this fib extension. Another way to do it that you can just look at, instead of doing a fib extension, we could just draw out, for example, what happened the last time we broke out. So this is the last time we broke out. We just take that move, and these are logarithmic charts, which means it's all on a percentage basis, and we extend that out. And that gets to 160, 170. So that's a more aggressive. It's saying that the last breakout that occurred, we're going to do that same thing when we broke out this time. Again, it could happen. It's a little bit more aggressive. And what I've noticed quite often is that when you have breakouts, quite often each breakout, you get a little bit less of a move than the breakout before that. There's people who are looking to take profits faster. There's more institutional owners in the game right now when it comes to crypto. So more reason that people could potentially bring that down. So that's, again, a very interesting way, and a way that I like to do that. And what we're going to do is we're going to take a look at some of these currencies with this extension. Now, what if we don't want to set a target? Because me personally, I'm not a huge fan of a target. I'll use something like that as maybe a guideline to say, hey, if we get there, that's, what the targets say. Maybe if we start to look weak around that area, I'll look to sell. But that's not very quantitative. And like I mentioned, we are quants around here. We use things that we can repeat over and over and over again. So another basic one is just a trend line. And you draw a simple trend line and you say, hey, if we're above that trend line, I'm going to get involved. So that would be one way to draw it. Another one would be to kind of connect this low with this low right here. And you're going to connect that trend line as well. So what are the pros and cons of using something like a target versus using a trailing stop? And if you just really think this through, it's all about regret minimization is kind of the way I look at it. So using a target, we're essentially saying, I'm going to set, if it gets to 131, for example, if we end up using that, I'm going to set that target, I'm going to sell. So let's go through all the scenarios that could happen. One is it gets to 131, roughly around that area, and then it reverses. And you got out at a great price and you feel super, super happy about that. The other is it blows through 131 and it gets like 250 or something. You got to ask yourself, how mad would you be that you left that on the table? Because that's the downside. The other thing is, what if it gets to like 125 and then just reverses back and hits your stop? That is a problem as well. Now, what about the trailing stop? What about the trend line that I drew here? Well, it's going to have its own upsides and downsides, right? And that's what I'm always here to tell you guys is there's no perfect system and there's no perfect answers. All we're doing is we're trying to kind of build a little bit of probabilities in our favor, develop a game plan in advance so that we're not wondering if Bitcoin is crashing, what we're going to do. We have the game plan, we just have to follow it. So A trailing stop, a trend line, a moving average could accomplish the same thing. You grab a moving average. Well, let's look at the scenarios. One is, what if it just rips in like 2 days all the way up to 150 and then it comes back down? Well, our trend line is still sitting around 111 right now. So it means we would get stopped out for 111. We would leave 40+% of our money on the table. However, what you're doing is you're trading that fact that if it does just keep going, say it just grinds up here slowly above this trend line and it gets to 250 in my example, you're still holding. You will always, with a trailing stop, lose some from the top. So at some point you'll look at your account and maybe your account is up 50 grand, and by the time you sell, you only make 30,000 in profit. That will always happen with a trailing stop, right? Just by definition, you'll never get the top. You're always selling on the way back down. So that's the other side you have to ask yourself. Again, back to the regret minimization mode, you have to ask yourself simply, okay, so will I be more upset if the thing rallies and then comes back down and trails my stop out? Or will I be more upset if I put out a target and it hits that target and rips through? And again, this is different for absolutely everybody that's out there, right? This is why exits are one of the hardest parts. And what we do in trading is we essentially just try over time to make sure that what we're doing is consistent and that is optimal over the long run. We will never know where the top of any one given trade is. We just won't. So from a standpoint of trying to do what's optimal, we're trying to think for the long period of time. Something like Bitcoin, I kind of like a hybrid approach where maybe you're selling some and trailing some. That's going to be suboptimal in the long run, but it's really good mentally. This kind of all of this cerebral thinking is what we remove over at StatsEdge Trading by being systems traders. Is we know when we are going to get in, where we are going to take profits, where we are going to take losses, what setups we're going to have, and we don't have to do this thinking because every trade has a whole trading plan around it. Entries, exits, targets, how we get out, all of that is sorted. So if you want to go from this kind of trading where you kind of have to guess on the fly, which is fine, and I still do some of, but you want most of your trading to be incredibly systematic where on entry exactly what you're going to do with every single trade, come on over to StatsEdge Trading. You can see all the stats for all of the different systems there and give us a shot. And until next week, get away from the screens.